Yo, what's up guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to take a look at STEM. It's one of our high conviction renewable energy stocks. It has done very well for us in the past, but has recently pulled back to a very critical level, and I see a lot of opportunity. So let's jump right in. All right, guys, before we get started today, subscribe to the channel for me, hit the little bell so you get notified every time I post. There's also a link down in the top pinned comment to my Patreon account. Come over and join the family. You'll get access to the Discord, all my portfolios, anytime I buy or sell a stock. I also send out a lot of swing trade setups, which is absolutely the most valuable aspect. We've had a lot of winners lately, and it is a great way to become a better swing trader, get education and take your trading and investing to the next level. So if that's something you're interested in, come over and join us. We have a limited amount of spots down on the $10 tier. If you're not fully satisfied, let me know and I will give you a full refund if you don't make your money back very quickly. Real quick, guys, I want to jump into this update on STEM. For those of you guys that are new here, I have made many videos on this company where I go much further in depth on the overall company, what they do, how they do it, why they do it. Today, we're just going to look at a couple of things. The reason why I'm doing this update is because I haven't made one in a while, but I saw an article that talked about what the goal is for getting to complete renewable energy or solar energy by the year 2035. The second thing is I looked at the chart and it is down at a very crucial level of support that I think we can exploit and have a lot of opportunity heading back up to the upside. So I want to give you my thoughts on where I see it going for the remainder of the year. Real quick, patrons, make sure you remember that we are doing the Patreon only night tonight with the live stream. So make sure you don't forget that. If you didn't see the post, we're going to start at about 5 o'clock. This is going to be more of a test run just to kind of make sure everything's running smooth. This is my first live stream, so we'll kind of, work through the kinks as we go. But I look forward to it. I'm really excited to go over the stocks with you and, talk about the market and kind of just hang out. So make sure you're there at 5. And that's Mountain Standard Time, by the way, which is, if you're on the East Coast, it's 2 hours behind you, so 7 your time. If you're in California, be 4 o'clock your time. But anyways, guys, a couple of things here. As of right now, the U.S. is currently sitting at 3% solar energy today. The goal that the Biden administration wants to get to is 40% solar energy by 2035. Some people think it's pretty much impossible, but I actually think it is possible. It's going to be very challenging, but I think it is possible. I think getting to 40% by 2045, very easy to do. But that 2035, that's only 14 years away. Pretty much, looking at the doing research, looking at the math, we would need to do about 61 gigs of solar energy storage a year for the next 11 years in order to do that, which that's what China's doing right now. That is the pace that they are currently on. So I believe if China can do it, we can do it. And the one thing that you got to keep in mind, you can have solar energy, wind energy, any renewable energy that you want, but without energy storage, it's useless because the sun does not always shine, the wind does not always blow. That's where I think STEM is going to fit in and become a huge player in the space. Now, there's a lot of different ways of storing renewable energy or solar energy. It's a new market, fast growing market. So there's a lot of different companies using a lot of different methods. As of today, I would say the most popular is these giant blocks of lithium ion cells that they're using to store it. I actually think in the future that will end up changing. Again, that is where STEM is going to fit into the picture. Now, we all know that the EV market, the renewable energy, green energy, that industry and market is set to explode over the next couple of years. It's rapidly growing. We invest into a lot of different companies within the space. I just saw an ICPP article the other day saying that most continents on the planet are experiencing some type of climate extremes. So with all of the climate change, the decarbonization, all of those different narratives being pushed, I think that we could potentially even see close to 40% energy, solar energy or energy renewable by the year 2035 without any government intervention. I just think that that's naturally where it's going to go. And if you leave it up to the free market, the capitalistic market, I think, just business owners, competition in general will end up taking it that way. The reason why I say that is because the levelized cost of electricity has drastically shown how much cheaper renewable energy is. Let's jump in and take a look at that. So as you guys can see here, out of all of these different energies. Now, the levelized cost of energy is pretty much how much it costs to build a facility. So how much it costs from start to finish within 1 year. So the full year, what it costs to generate energy from that facility. And that factors in all the costs, building, maintaining, everything. Now you can see by this graph that the top 3 cheapest forms of energy today are all renewable: solar, geothermal, onshore wind. Now, the closest is combined cycle gas, which is still a fossil fuel, but nonetheless, when you've got 3 of the cheapest forms of energy being renewable and they're already trying to push for more renewable, I think it is inevitable that we will eventually get to that 40% solar by 2035 or really close to it. Now, like I said, that's the pace that China's already moving at. So I think that we could absolutely follow in their shoes. And that is where STEM, I think, is going to step in and be a huge player because they have that Athena smart energy storage, which is the brains of the operation. It shows a huge efficiency in storing energy and distributing energy. Now, with that being said, they are actually expecting the energy storage industry to be like a $1.2 trillion industry within the next 10 to 15 years. So I wanted to jump on and take a look at STEM's most recent earnings report because they did show a big improvement over the last couple of years, last couple of quarters as well. Then I want to take a look at the chart. We'll go through some of the investor presentation and just kind of remember why we bought it in the first place. And we'll kind of take a look at where we see it going. So first thing we're going to look at, guys, is the earnings report. As you guys can see, they actually had a big miss on their EPS. They missed by $1, negative $1 per share. The revenue was only 19.3 million, so nothing insane. The gross margins was really impressive, though. They went from negative 40 in the same quarter last year to negative 1 this quarter. So much better on their gross margins there. The non-GAAP gross margins of 11%. Up from 5% in the same quarter last year. The net loss of 100.2 million versus a net loss of only 19 million in the same quarter last year. So they're growing their business. They're trying to expand. It's a new company. Obviously you're going to see big losses for a couple of years. I think, they could potentially become positive within the next 5 years, but that might be pushing it. We'll just have to kind of see how that goes. So this is a risky bet, right? This is a growth stock. Like, this is something that they do not have positive net income. They do not have positive free cash flow, none of that. So you are, investing in this stock because of the charts and also because of where the energy, storage industry is going. Next thing, guys, is the adjusted EBITDA of negative 8.6 million versus negative 7.5 million in the same quarter last year. So the adjusted EBITDA was about the same, not a big change there. A couple of things here, guys. This is a highlight from their, investor presentation. A couple of things I wanted to point out. The battery storage capacity is expected to increase by 25 times by 2030. So, guys, that's only 9 years. That's a big jump in how quickly the industry will grow. 950 systems operating or contracted with STEM's Athena software. So it's not like they don't have their products out in the market. They've got almost 1,000 systems in operation right now, which is extremely important to point out because a lot of these renewable companies, they don't even have their products out in the market yet. Next thing, guys, is they are a first mover AI platform that operates with 40 plus utilities, 5 grid operators, and over 20 million runtime hours, which would be 2,200 a year. So again, their product has experience. It's been out there. It's working. It's efficient. It's effective. Now, a couple of things here. Reoccurring revenue streams provide strong financial position to accelerate growth. Revenues projected to grow at 50% compounded annual growth rate from 2021 to 2026. Very important. Next thing I want to look at, guys, is where we are going to see them go for Q3 and Q4. Now, as you can see, by the end of June, they had a 12-month pipeline of about 1.7 billion with a contracted backlog of 250 million. Now, the 2021 estimated revenue for the full year is 147 million with a negative 25 million on their adjusted EBITDA. Now, this is one thing I wanted to point out. As you can see here, guys, as the seasonality of their business goes, they get 20 to 30% of their annual revenue in the third quarter and 50 to 60% of their revenue in the fourth quarter. So with that being said, I think this is the months that we could see STEM's stock price appreciate much more than it has over the last couple of months. They're going to do a majority of their revenue in this quarter and next quarter. And so I think that throughout the end of the year, we could see a lot more hype around the stock, them posting much bigger numbers, maybe even beating expectations on their numbers, and the stock could benefit from that. Now, it could also go the other way. If they are expected to do this much of their revenue at the end of the year and they miss, that could be extremely bad for the stock price, but I actually think they will end up beating it and doing very well. Now, the last thing I wanted to look at before we jumped into the chart, this is a page from the investor presentation from clear back in 2020 when they first announced their merger as a SPAC. I want to point out the revenue here, guys. Not only the bookings and deliveries, right? That looks great. If we look at 2021, they are predicting, or they were predicting, to do 615 bookings and 332 deliveries in full year 2021. And they're looking to scale that to 7,183 bookings in 2026 and almost 6,000 deliveries in 2026. Now take a look at the revenue, guys. Look at this scale of how they are projecting, or how they were projecting, to grow their revenue. Now, I am not sure if they're going to do this. That was one of the biggest things, and one of the biggest issues with SPACs and why they got beat down so bad is because they would come out with absolutely insane revenue projections, and that is pretty much what we're looking at. So as you can see here, guys, in 2021, they are expected, and this is what they said that they were projecting when they released this months and months and months ago, 147 million in revenue for 2021 full year. And as we just saw from the previous slide from their newest investor presentation that came out with Q2, it is the same, 147. So if they continue to stay on track like that, guys, they will go from 147 to 315, 526, 748, 944, and 1.167 billion by 2026. That is absolutely insane revenue growth there, guys. They are growing revenue quickly. They're growing their gross margins. They are adding to their backlog and contracted, pipeline, doing very, very well. Where I actually see the most benefit is their Athena, their reoccurring revenue with the SaaS program. Guys, that has got a 100% attach rate, and it comes with contracts of upwards of 10 to 20 years. And when you create an attach rate that high and those reoccurring revenue contracts, people stay with you. They don't sign contracts for 10 or 20 years with the intention to try it. They sign contracts of that long to use it. So the Athena software is out there. It's performing well. It's got a great attach rate. Their reoccurring revenue will continue to build. All they have to do is execute and put themselves in the right position to continue to grow their backlog and their pipeline. Let's go ahead and take a look at the chart as the last thing here. All right, guys, this is a really good looking chart. Actually, one of the main reasons I made the video, because the levels that it is at. So guys, we saw, just like all the other SPACs, the big run up, big drawdown, and it created this inflection point. Now, why did it create this inflection point, and how did we know to identify that? So we had the first initial candle high close of all time. We had the big gap up and the sharp reaction down to the first candle high close off that gap. So we had the pullback and we ran. So it ran right when it broke this level straight to $38 really quickly. Ever since then, it correlated to it many, many times. As you can see here, guys, after the big run up and the drawdown, we had 1, 2, and a third test there before we finally couldn't hold it and broke it. Once we broke it, where did it go? Went to that initial candle high close. Tested it and then broke right through and went straight to that $38 range. So guys, reason why I'm telling you that is because we want to look at these inflection points and see what happens historically. Historical price action. We want to look at how it correlates, how it reacts around those areas. So again, we got the blast through, runs right to 38. Couldn't even test it. It was too strong and ran all the way to all-time highs, came down. First test, notice, went straight to $36, $37. Second test didn't have it in it, couldn't even get halfway there, barely got to 31. Third test couldn't even get close, and that's why we broke it. So you have like a descending triangle there, but it was strong enough to find support right there at that initial candle, high close, and then broke it. And as soon as it broke it, look at how strong it was. Couldn't even back test it with that wick before running all the way to like $40 almost. Guys, I sent this out right down here around $14. I bought it at like $14. I thought that was outrageous. I didn't think that price should have ever have been that low. But ever since then, we got in and then it ran up, and I just hold this as a long-term conviction hold, so I haven't sold any. But then we had that quick drawdown, and we kind of created this M-shaped formation. One thing I want to point out, guys, if you take a look from the $10 NAV price to the all-time high, we almost made a 90% 886 retracement from the all-time high to that low right there in May. We couldn't quite get there though. We made about an 80%, 786, quite about there. And then after we reversed here, we made an, almost a Gartley, pretty informal, but we made like a 61% retracement. And then we just about made a 786. I think that might be a little too low. 784, so pretty much a 786. Now, the reason why this is not a traditional formal Gartley is because your BC projection is a 366 and it needs to be a minimum of 382. So not quite deep enough there, but however, we had the first low, we had the second low, which tested the bottom of the zone, making the pattern completion zone of the Gartley. And then we had the second confirmation low that was also at the top of the zone versus the bottom of the zone. So that is accumulation right here, guys. You had more market participants every time it tested that low than you did on the previous test. Very good. That is exactly what you want to see when looking for a stock like this. Now, the reason why I like what I'm seeing so much, guys, is because not only did we have the inflection point and the second low that was higher, we also had bullish divergence at the pattern completion zone, implying a major reversal. Now we also have the 200-day moving average pointing up. We've just crossed over the 50-day moving average. We had a beautiful morning star reversal, as you can see here. We had the bearish candle, the doji indecision candle, and the big ignition candle with the gap right after, and the wick tested that 20-day moving average. So guys, I think we are in really good shape right here. This is some very bullish, performance or bullish, activity. If we take a look at the, the RSI, we just broke that, 50 neutral level. We're sitting at 54, almost 55. So we're headed to that bullish control zone, exactly where we want to see it. We really want it to be 60 to, 70. If we take a look at the relative strength index, you can see here that we have been on a pretty consistent downtrend. Every time we have had any bit of strength, we have made a lower high than the last previous relative strength, except for here and here. So I would really like to see this back test that neutral zone before running to much higher prices. Guys, if STEM can continue to perform well and continue to catch bids and get positive momentum, as you can see, we are also building our first green positive momentum candle on the histogram on the daily. That is not quite confirmed yet. It would need to close today. If we take a look at the 3-day, you can see same type of bullish reversal candle pattern here with the, morning star. And then we have not had positive momentum on the MACD on the 3-day until or since the beginning of July. So we are about there. We're weaning, losing our negative momentum. Our RSI is pointing up, headed back to that bullish control zone. Everything is looking really good, guys. If we take a look at the weekly, we are potentially going to close a bullish engulfing candle today. Not quite though. It wasn't, didn't open lower. I usually, when I call a bullish engulfing candle, I like to see it open lower than the, the bearish candle and close higher. But some people call them bullish engulfing if it's just, gets a little bit above it, even if the bottom does not open below it. But with that being said, we haven't seen positive momentum on the weekly since, again, the beginning of July. RSI breaking up through that 50 neutral zone. Everything is looking really good, guys. I think our target is absolutely, first target is 36.92, second target 38, after that 47.19. If we take a look at the 4-hour, same type of activity here. We are getting ready to test that 200-day moving average on the 4-hour, which is right there at about $27. So we could see a little bit of stall there, but I think we should get right through it if everything continues to move like it's moving. Like I said, guys, these are your low risk areas. These are the levels you want to buy this stock at. Anytime you can get it down here at this inflection point, the better. You may come back and get another test to fill this gap. But who knows? You'll just have to wait and see. I think anytime you can get STEM under $25, I think that is a great price for the stock if you're patient and can hold it for the long term. But even if you were to buy it when it comes down here and shows bullish activity or reversal activity at this inflection point, I think that could be a very good short-term trade, taking it from here back to here. As you can see, straight up, straight down, straight up, straight down, straight up, straight down. Had a little bit of chop in here, but straight up, straight down, and then a little bit of chop. So, you know, we could very well see straight up, straight down, straight up, straight down. Who knows, you know, what will happen. But again, love it at these levels. Think it's got a lot of opportunity to head back up towards the upside. Really like the Gartley, even though it's not formal. Still a really good looking shape. That's what we want to look for, those M-shaped formations, making double bottoms at critical inflection points from history, you know, bullish reversal signs, candlestick patterns like the morning star, and, you know, bullish divergence. So that's it for today, guys. Thank you so much for watching. I really appreciate it. This video is for entertainment purposes only. I'm not a licensed stockbroker. Remember to come join us if you are a patron member or a member of the family for the patron only night tonight, and I will see you in the next one. Love y'all. Peace.